Hey guys, this is Market Update. So as the bull market moves on, things are potentially going to get very insane. Not just because of the price, but what comes out of the market during that bull phase, right? So actually, if you look at Bitcoin cycles, 2024 should be a recovery year, and then 2025 should be the bull market year where you reach massive new all-time highs. Now, when that happens, you get all sorts out of the market. People thinking they're the next Druckenmiller, timed it perfectly, right? They get too aggressive. They go in at the wrong prices as the price moves up, right? You have FOMO, you have hubris, all of that comes in. You have people showing you their P&Ls online. People then have FOMO because they didn't get in as early and they need to make profits. Then they start to leverage trade because they need to, make more out of the market. You're in leverage, then you get drawn down on, right? So I want to talk about that because this week, a lot of people are looking at MicroStrategy and saying, what the hell's going on here? These guys are essentially leverage trading Bitcoin in the public capital markets, right? And so what's their strategy versus what an individual can do? A lot of people are saying, what exactly are they doing? I want to try and break this down here. They're doing something fairly clever, but something that we can't really do as individuals. There's one way we can do it, and I'll go through that in this video. So Bitcoin at 70,000 here. Look, we had almost a new all-time high, I think it was, dropped down. The election's coming up. It could be a real mess, right? I hope it just kind of gets sorted and within a day or two of election night and that's it. But it could drag on. And if it drags on and it's uncertain and all that, Bitcoin is going to hate that environment and it's probably going to sell off a little bit. That's where we are, right? So if you do trade crypto, Bybit deposit bonus down in the description. Click the link down there, you can get up to $30,000 as a deposit bonus. We are right at the stage though, where we're starting to enter the final phases of the bull market. And this is where, you're actually, as a trader, looking to potentially have areas to get out of trades and not get into them. And the problem always is that many people come in during that top phase, and the next phase from that is a drawdown. And so we're actually entering the phase where the risk reward starts to get really bad for new trades. And this is where everyone gets wrecked, right? Because people don't come in here. They don't want to buy it at 15. They don't want to buy it at 20. They don't want to buy it at 25 or 30. They wait till we're 80 or 90 or 100 thinking, well, this thing's just going to go up forever, but it never, ever does. And I've seen it all online where people are saying, because Michael Saylor wants to buy billions worth of Bitcoin, we can't have a drawdown like last time. It happens every single time. We're going to get the drawdown just as every other time, right? It's going to be 70% drawdown from the all-time high. Michael Saylor's not going to make a dent in that. That's just the way it is. We're going to get a blow off top with a FOMO run, and then we're going to get a big drawdown, right? So as we are right here, this is essentially on the precipice where we're going into this mature stage of the bull market where new trades are just getting worse and worse from a risk reward standpoint. This upper blue line, and I'm standing by this, is essentially the area where Bitcoin should reject from at the all-time high. And it depends on the time, but it's anywhere from 150 to maybe 250. Yeah, it's volatile, right? We can't have a specific price prediction because we don't know the time where it's actually going to top out there. But that would be somewhere where you just cannot take any long trades, right? Because it always rejects from that trend, right? Why would it be different this time? It isn't different this time. Bitcoin trades along macro cycles and central bank cycles. When it's up here, this is when people start getting into FOMO trades, trading with leverage, because they're like, I just need to make the profits that everyone else was making when they were buying back here, and you get wrecked. So let's go through that. But look, I still think we're in the buy phase right here, but this breakout is essentially the end of that phase, and you're going into just the mature phase where you've got to be looking at either, taking profits if you want to do that, or just not buying or buying less. Or if you're a long-term investor, you're just tucking some away. It doesn't matter to you, right? But I'm talking about people that want to trade and outperform. That's what most people are looking at when they watch these videos, right? So we're still in the buy phase, but we're getting close to the phase where it's just the risk reward isn't there. And that's where people get wrecked because they're going in with leverage long here. It's totally the wrong thing to do. So let's look at how some of that works. People do absolutely sell their Bitcoin during bull markets. You can see that in the data, right? Bull markets are where new entrants come in and they want your Bitcoin and they just need to trade a price that's acceptable for you. People do sell out. You can see this. This is orange and blue right here, which is blue long-term holders distributing as the price moves up. They're buying the dip here and then they're distributing again as we move up. A bull market is where new entrants come in and say, I want to buy a Bitcoin. You bought at 15, 18, 20 in the last bear market. Now I'm going to give you a 10x on that. And long-term holder says, yeah, sure. Because they know if they sell at 100, 150, 180K, the next bear market is going to come along, they can buy lower, right? So that's their trading portfolio. Maybe they have some that they hold for their retirement, they're not going to trade, whatever, right? But people absolutely do buy and sell. But if you're coming to Bitcoin, you're coming to crypto here saying, I want to get in because the price is moving up, just know that we are entering the latter stage of the bull market where if you're buying, you're the one buying off those people that bought earlier. And so if you're buying at 100K, 80, 90, 100K, you're really buying that to realize the next bull market, which is a 4-year hodl period, right? You're not buying 100K Bitcoin to try and trade out of it within 12 months. 12 months later, just on Bitcoin cycles, it'll be lower than that, right? So what are you actually doing? What's your strategy? If you're just buying because you're hoping to make a bit of money, you're going to get wrecked because this part that we're in is not the part of the cycle to do that. The part of the cycle to do that is bear market and recovery. And we are just about, when we break kind of 80, 90K, we're going into actually the end of the bull market, which is the time to distribute, not the time to accumulate if you're looking to trade within 12 months. So I hope that works out. You can see people do definitely buy and sell Bitcoin, and they're distributing Bitcoin when the price goes up because this is a volatile asset and they know bear markets do come. So they're on the right side of it, on the right side of the cycle, which is buying during bear markets when everyone else is scared and selling. They're buying that, and so they reap the rewards there. If you're trying to get in at the top of the bull market, which is just about entering, you're either just buying for the long term, 4 or 8 years in the future, or even longer. If you're buying for a 12-month trade, well, it's better to buy for a 1-month trade at that point rather than 12 months because 12 months after the peak of a bull market is a bear market. So just know where on the cycle, and this FOMO and stuff is just not going to help anyone. Let's look at what MicroStrategy are doing because they're outperforming every other stock in the S&P this year. What are they doing? They're just leverage longing Bitcoin. But it's a clever way to do this. They're using their public capital structure and their boring business and the cash flows from that. They're leveraging up the balance sheet there to go and invest in something that's annualizing at 40% a year currently, which is Bitcoin. So they're using non-volatile, boring assets to leverage the high volatile, high growth asset. Now, as long as you can pay for leverage and don't get margin called, then that's how you use leverage to earn higher returns. But of course, as an investor, right, we can't do this because we don't have public companies. And also, you have to know how these public assets trade and the valuations they trade at can change massively over time. I want to go through that here. So what they're doing is leveraging the public markets. They can issue debt at very low rates that we can't ever get. I think their blended rate's like 2% or something. We can't get that, right? So they already have an advantage. They have a lot of equity. They can sell equity in the company, right? Just sell equity in the company, go and buy Bitcoin. Okay, we can't do that either, right? Maybe if you have equity in a home, you can release that, but that's obviously debt on top of that as well. So we can take debt, right? We can, take a personal loan, or we can take a mortgage, but again, much higher rates. Although the difference isn't that much, to be honest, right? Between 2 and 6%. If you take personal loan at 6, 10% or something, but it's still incrementally, a lot more to deal with. And if we have income, we can just put that in BTC, right? But there's no leverage there. What they're doing is just leverage long in Bitcoin. Now, Bitcoin is in a recovery in a bull market. So guess what? They're going to outperform everything. But what happens when the market thinks that the price of Bitcoin is going to fall? Well, you have a leverage long Bitcoin play that's going to be more volatile on the downside as well, right? So it matters which price you get in at for this strategy. Here you can see MicroStrategy is more volatile than any other S&P stock. So volatile to the upside, good. But like I said, we're getting into the mature stage of a bull market where the risk reward for these things starts to not look good because the next stage, where you want to get in up here on a leverage play if the market is going to draw down from that. Look, I still think we're miles away from it. Like if you're getting in now when Bitcoin is 80 and it goes to 160, like you're going to feel like, wow, I made a great trade, right? I just want to explain where we are in the cycle if you actually want to take this risk. What they're doing, they're just using the public capital market structure, debt, equity, converts, right? Other types of instruments, just getting cash in, right? Paying almost nothing for that cash and selling the garbage and buying the very high volatility 40% LR asset. That works as long as you can keep paying for your debt. So MicroStrategy probably can, because what they're doing here is they're leveraging boring business cash flows. They have a business, it's very boring, it makes cash flows, so they have that there. They can leverage those because they have some certainty about those cash flows, leverage those cash flows and pay the debt, very low coupon. They can go and buy the high risk asset, right? But for individuals, we have to think, well, if we want to leverage long Bitcoin, what are we doing with our strategy as well? The reason using leverage can work for MicroStrategy is because they have a boring, reliable business with cash flows. So they can just take debt on those cash flows. They're taking debt on the boring stuff and putting it into the high value stuff. And they think that they can pay for that debt. It's very low coupon debt. And even if they can't, they can just issue equity to pay off the debt and issue converts to pay off the debt anyway. So like their debt is basically payable because they can leverage capital markets. We can't do that, right? If we don't pay a coupon for our debt, right, things start to go south pretty quickly. So that's one thing. It's like de-risking for them. The other thing is, what price are you getting into MicroStrategy if you want to invest in this? Because for them and their strategy, all they're doing is leverage longing, and they can pay the coupons and they can issue equity, which is like, so what, right? It doesn't matter to them. It's nothing to pay. They can just issue equity. We can't do that if we get a margin call from the mortgage company or from the bank or a personal loan, right? So that's why it's just way more risky to do it individually. Now you may say, well, let's just let Michael Saylor do it, because he's obviously way more professional. He's in the capital markets. He knows what he's doing. But it matters which price you get in at, because what MicroStrategy, the stock, MSTR, is valued at is essentially the market's perception of how the net asset value is going to grow over time and how that leverage is going to play out, right? So during a bull market, you may see people buying this stock and thinking, I'm going to pay a premium of 20, I'm just going to make this up, at 20 times net asset value. Because in a bull market, you see the price going up, they're taking leverage. Great. So 20 times net asset value. Let's say Bitcoin drops 50% in a bear market. Not only is their net asset value actually going to fall, but the market's future perception of the premium that they give MicroStrategy on top of that net asset value can also fall. So rather than valuing it 20 times net asset value, now the market values it at 10 times net asset value. So now not only has the actual value of their assets fallen, but the premium upon which the market values the stock also falls much further down into their net asset value. That's why during a bear market, this thing can get absolutely destroyed, if it's not careful. I don't know what the market's going to value this at the peak of the bull market, but it's way more volatile than holding BTC. So as long as you're aware of that, if you think that MicroStrategy can keep this going, that's fine. But just be aware that at the peak of bull markets, things get expensive like this when you're taking leverage. This is not like investing in the Mag 7, where it's just like these businesses just absolute cash cows and they're just going to keep buying back stock. This is very, very different. And so, it's just something to be aware of if you are looking to get into MSTR. The only way an individual can get close to what MSTR are doing is taking out leverage on their income or their house. I would suggest not doing that, because it's going to increase stress, and it always goes pear-shaped, right? Because like I said, we're entering that stage now where you should not be taking leverage or doing anything, right? I get it. Like for a trade, for a small part of a portfolio, you want to try and ride this. And I get that, and it could work. But up here, if you're starting to mortgage houses, it's definitely not the place to do it. Because do you want to be paying off that debt during the bear market as we get these drawdowns? No, right? So personal loan, 10%, put it into Bitcoin at 40% IRR. I get it. And you can kind of pay for the Bitcoin over time. If that's something you want to do, if you think you can pay for the loan, I do understand that, right, to actually get in. But again, you want to be doing that below the orange line and not up in the peak of the bull market, right? You have to think about time frame, paying off the loan. Again, with the mortgage, I understand it makes sense. The maths works out, right? You have a 100K mortgage, you pay something each month. That's at 6%. You put it into Bitcoin at 40% IRR. Like, I understand it. But again, do you want the extra payments? Can you release that equity from your house to put it into BTC? What price are you putting it in at? Again, I would have done that somewhere around the bottom of the bear market. Maybe here it works, but certainly not up in these prices. So MicroStrategy is going to outperform. It's going to outperform as Bitcoin rises in the bull market, but that's probably not the best time to get in. So all of this leverage stuff actually works out best in bear markets, but that's where no one does it. Doing it in bull markets is increasing risk, increasing volatility during a time where Bitcoin is peaking out. So it's not the time to get in, right? That's why I say Bitcoin, just cash spot Bitcoin held, right, is the sweet spot trade, because it's no hassle, it's no stress. It's going to get outperformed by MSTR, it's going to get outperformed by altcoins, it's going to get outperformed by individual stocks, but it's just a broad diversified financial index where you don't have to worry. So do you want to trade like this? I would suggest that it can be done if you have some risk tolerance during the first parts of a bull market, which we are now finishing. And so these strategies are not going to work out during this latter stage. I'm making a few more videos on this for the crypto investor course update, which will be coming in a couple of weeks, in terms of money management, right? Figuring everything out with BTC in that mix. So link below for that if you're interested. The update is coming for free for existing users if you have the course already. I'm James, this is Money G. Cheers for watching, and I'll see you in the next one.